thank you so much for joining us here
Thanks
at
for having
Super
me.
Return International. It's great to have you here. This asset class continues to mature, and where do you see the most investor appetite activities at the moment in what is quite a challenging environment?
Yeah, so generally what we've been saying is that given the uncertain economic environment, that broadly syndicated credit markets are somewhat fair valued right now. So how we've been trying to attack the market and how GoldenTree's set up is we look across different asset classes globally. So right now what we've been trying to find is areas where there's been some forced selling or technical issues that have created some opportunities. The several areas that we've been focused on have been one in the structured products market. That's where we tend to see some of the best risk reward at this point in time. When people think structured products, sometimes they think CMBS or offices, and that's not an area that we've been very focused on, given obviously a lot of the issues in the press that we tend to see. Where we've been really focused is in two specific areas there. One in CLOs, so collateral loan obligations, specifically in the more senior tranches, the investment grade tranches there. They're giving you probably some of the best risk reward in the markets. And then the second area, which fortunately we're here at Super Returns, is in the private credit side. That's an area where, as banks have been pulling back from the market, and that there have been more large companies coming to the market, we've seen a lot of other managers have to shrink their size. So that's given an opportunity for somebody like GoldenTree, who's historically been more in the broadly syndicated markets, to be more active in private credit.
You've got that infrastructure in place that allows you to analyse the relative value across credit markets.
Exactly. So we're 90 people on our investment team. We're set up by industry, which is somewhat unique versus other players in the market. So on average, our analysts have covered their sectors for 15 plus years. So that allows us to really go deep inside these companies, understand them a little bit better. And then also, given that we've seen a lot of these industries or a lot of these companies over the last 23 years that GoldenTree's been around, we can react very quickly to that as well also too. And sometimes in this market, speed really is what matters most, and being able to do things that are, banks are not able to do or other people are not able to do. And given how big our investment team is and how broad it is, that's what really gives us an edge here.
Particularly important in this climate.
Yes.
Loan issuance is also an area where we've seen tremendous growth. What impact are the higher rates having on those issuers at the moment, and what are the opportunities and the risks, I guess, to be aware of in light of that?
So as a loan buyer, higher rates is very good. Even the base rates are up 300 to 400 basis points in the last few years, but company capital structures have not been set up for higher rates. So what you saw over the last decade is that companies were taking on more leverage, and with more leverage, now as rates have gone higher, they can't support their capital structures. So the way we look at it simplistically is, what is the interest coverage of the company? So how does your cash flow cover your interest? Now it's about half of what it was 2 years ago, and that's before we've entered into any material economic uncertainty across the market. So we do think that will lead to a lot of stress in markets. And at GoldenTree, particularly, we have a focus on the distressed market. That's one of our core competencies. So really, and it's going to take a long time to get there, over the next few years, you're going to see more and more companies run into liquidity issues. And really, when you think about it from a sectoral perspective as well, also too, typically, and I think this is my fourth cycle, or fourth larger cycle being in, normally where you've seen the most issuance is where you tend to have the most stress the next cycle. So over the last decade, we've seen the most issuance in sectors like technology, in healthcare, in media telecom. So already that's where we're starting to see some of the stress for companies that can't afford to pay their bills given the higher interest rates right now.
So rapid uptake and lots of evolution there, and that's something you could say about private credit itself as well. And you touched on it in an earlier answer when you talked about having to be quick to respond.
Exactly.
How is this industry evolving, and why is it able to ahead of other asset classes?
So when you look at private credit historically, a lot of people have always thought about it as lending to small businesses. So the biggest change that we've seen, and I'd say it's the market where there's been the most evolution in the last 4 or 5 years on the credit side, is that now much more large companies are coming into the private credit market. So that fits more with what we do day to day at GoldenTree. We've done private credit or direct lending I've been at GoldenTree now for 17 years. We've done it ever since I've been at GoldenTree. But now you're seeing more of these large businesses. Also what you're seeing is, historically it was more sponsor driven, so private equity driven. Now there are more public companies coming into the market. So about half of the transactions we've done have been to public businesses, so non-sponsor owned. And historically and typically they worked exclusively with banks because of the size of the issuance they need to do. But now you're seeing a disintermediation of both banks, and that's been the biggest growth area from the sense on the private credit side.
Yeah, huge growth area. And with so many players in this market now,
Yes.
how do you sort the wheat from the chaff, and how do you make sure that you've got the best people? And I guess how do you see talent being acquired in this environment when there are so many players?
Yeah, so a couple different ways to answer that question. From a sourcing side, which I think is where a lot of the talent we've tried to add, thankfully we have a relatively diverse sourcing channel. So as I mentioned, normally private credit managers look to source directly from private equity sponsors. Our sourcing channel is much more diversified. We work directly with companies, with private equity sponsors, with our distress network, which I talked about. Also, what we tend to see is a lot of opportunities to work with banks. So not to necessarily disintermediate them, but to work directly with banks as well also too. So having a very diverse channel has been very important. And then the other main thing, which is very important to us, we're 100% employee-owned business, and our growth isn't to be the biggest asset manager, but to be the best. So really, when you look at a lot of other private credit managers, what they try to do is grow by assets. So just do a lot of transactions. How we try to focus is by doing a smaller subset of transactions and to optimize the use of our team and really going into more complicated situations, because that's where we feel like we can differentiate ourselves. So the goal was really to utilize as much of the core existing team as we can, and that's what we feel like will be what separates GoldenTree from others.
It sounds like, given your faith in your team there, you're quite optimistic about the future.
Yeah, no, I've hired a lot of the team over the last 10 to 15 years, and we definitely feel like we have a very differentiated team, both US, Europe, and Asia. And certainly, that provides us the opportunity to, go deeper. And as I mentioned, the ability to act quick and move quickly. So again, being able to do a lot of transactions for companies we already know or we've seen a lot of times, and not having to just completely re-underwrite things immediately, that allows us to have that ability to move quickly. And then the other piece is with our distress team, as I mentioned, we have 20 people on that team. Half of them are on the legal side. So being able to work through the documentation by ourselves, that's also a competitive advantage to what we see from others in the market.
Lee, it's great to hear your insights. Thank you so much for sharing them with us.
Thank you.
Great to see you.
Thanks for your time.